All right, then, let's move on to the first issue, main issue for today, which really concerns a lot of Nigerians. The value of the Naira continues to nosedive despite efforts to boost its strength. The Naira depreciated further in the parallel market on Friday as it traded at 950 Naira to $1 in Lagos, compared with 930 to $1 it went for the previous day. But on the investors and exporters window, the Naira closed at 781 to $1 compared to its opening rate of 782 to $1. This is coming as the International Monetary Fund said Nigeria's loose fiscal and monetary policies are creating excess liquidity, making it difficult for the Naira to stabilize against the dollar 2 months after it was allowed to trade freely. Right. So, Biko, I want to ask you, what exactly do you think is happening to the Naira?
I agree absolutely with those who say excess liquidity is a problem. Apart from the CBN's ways and means release to federal government to take care of some statutory demands. Our system is so loose, there's a lot of corruption in the system, and people have access to cheap cash in Naira.
Yeah.
You understand? Okay, if the CBN was not helping the federal government by way of these ways and means. Ways and means are debts that the federal government and its agencies owe the CBN. The World Bank has warned us that, look, these debts of the CBN were too wide. And that was why Obaseki once said that we were simply printing Naira notes. So they can't pay salaries, they can't honor some obligations, they simply go to the CBN, make the money available. When you make the money available and the states, the federal government, they are awash with cash, because corruption is rife in this system, people have access to loose Naira notes. And once that happens, they are looking for the dollar to secure it as a store of value. Because the dollar does not depreciate like our currency. So you have 1 billion, maybe somebody paid you, there was a contract that you facilitated, and a gain of 10 billion was made. There were 5 of you. We share the 10 billion. 1 billion came to you. You are looking for dollars that you can change that 1 billion to, and then lock up a wardrobe in your room. If they break into people's houses in Abuja, big people in Abuja, the tons of dollars that they are going to come out with, you'll be dazed. Even in this Lagos, people simply locking up dollars. Yes, it's their money. But some of this money, some people didn't get it through the right means. From Naira stolen, people simply go and find the dollar equivalent and then keep it. That is what is happening. We talked about this. I know someone who bought a house for 375 million. 300 of it was paid in cash. The rest was transferred. And which cash are we talking about? People want to bribe big politicians, they will not bribe them with Naira. But nobody is interested in carrying tons of cash up and down. The world will be looking at you. It is a dollar. So the demand for the dollar in Nigeria is an unusual one. it's not based on production or any reasonable variables.
Right.
It is based on excess liquidity that we talked about earlier and the product of corruption. People want to secure their, how does the EFCC call it, a process of corruption. They want to secure it in dollars. So nothing will stop the hunger for the dollar in our country, except we begin to earn a lot more. When we begin to earn a lot more, when we deal with the matter of stolen crude, when we deal with the matter of stolen crude, and we're able to earn a lot more, then there will be more dollars coming in. If the operating environment improves, foreign direct investment will come into our country and we'll have some dollars. So the dollar illiquidity will reduce for people, for those who truly need it. A lot of people going to get dollars now, they are not investors. They are not manufacturers who badly need it for their raw materials and all that. A good number of them are just exploiting
it up and storing it up.
Going on.
Right. We have our guest on Zoom, but before we go to him, I want to quickly have your take. Analysts attributed the depreciation of Naira to excess cash in the system, with some, specifically accusing the state governors of using, to mop up dollars, just like BKO said, thereby putting pressure on the foreign exchange market. How sound do you think this argument is?
We've had the argument over and over and over and over. I think in the last 7 years, every time. That's what they tell us. CBN, Monetary Policy Committee, they've always said it. And the major instrument they've always used, mopping up, aggressive mopping up, aggressive mopping up, was not worked. And if you've been following this argument over the years, it was part of what morphed into the money Naira redesign policy, that they needed to reduce the excess liquidity in our system. That some people had vaults in their houses, in their premises, that they illegally, store, money. You understand?
Yeah.
So it has not worked.
Interesting. Well, let's get on the Zoom. We have joining us for more discussion on this is the Chief Executive Officer of the Center for Promotion of Private Enterprises, Muda Yusuf. Thank you so much for joining us, Doctor.
Thank you very much. Good afternoon to the Hangout team.
Right. Let's get your thoughts. It looks like there is loss of confidence in the Naira, and some people are bent on taking advantage of this, by working on people's psychology. Do you, kind of share your perspective regarding this?
Do you agree that there is so much liquidity in the system by way of Naira notes, and that is fueling an unusual demand for the dollar?
Yes, I agree. I agree with your position, in particular, BKO. There's evidence of a high level of liquidity in the system. But the liquidity may not even necessarily be cash. It could also be part of the money sitting in the banking system. So the liquidity, of course, is an issue. Then there are also, different kinds of liquidity, just as BKO said. There are genuine, sources of liquidity. I mean, people have worked for their money. They have their money sitting in the bank and all of that. And there's also the component of the slush funds. When you have an environment where there has been so much corruption over the years, you tend to have this kind of factor, this kind of variable that, destabilizes or disrupts some key macroeconomic indicators. Because of the nature of corruption, and whether we like it or not, a lot of funds are in the system, coming particularly from the public sector, which are not funds that were either borrowed from the bank or they were proceeds of any genuine investment. And for such components of money, I mean, they could buy the dollar at practically any rate. So because we now have a liberalized market, all of these things are coming out to put a lot of pressure on the foreign exchange market. So the factor of liquidity is real, in my view, both in terms of the cash and in terms of those who are who have some money in the bank. Then, of course, there's also the point you made about issues of confidence. Now, when there is an issue with confidence, people tend to rush to buy things. Even if the price is going up, there'll still be this rush. So a lot of speculative components also exist in the foreign exchange market, which is why it is very important as much as possible to ensure that we have stability in the foreign exchange market, particularly in the official window. Of course, it is good to work towards the convergence of rates. But at this time, with the way things are, there's a limit to which you can begin to chase the parallel market rate. You should, as much as possible, ensure stability in the and-in window. And the CBN should continue to support the Naira to the limits that its reserves can accommodate. So once we have stability, yes.
Go ahead, land on your thoughts.
Once we have stability in the and-in window at least, I think that will give some confidence to the system, and all this anxiety about the Naira will fall tomorrow and all of that, and all those volatility, they are really not good for the economy. And I must also say that we cannot afford to go full-blown into full flotation of the currency, or to allow market forces entirely to determine the rate. No, there has to be ways to manage, the rates so that we don't have that kind of volatility. There's nowhere in the world where you leave your currency entirely to market forces. Of course, the risk we may face is the fact that, yes, we begin to see some divergence between the official window and the parallel market window. But the situation is still fairly manageable, because under the previous dispensation, we had official window of 460, parallel market of over 700, 750 or thereabouts. We had a premium of almost 60%. The global practice for premium between the official window and the parallel is just about 5%. Right now we are going over 10%, going to 13%. So we should still continue to manage that, but we should not be desperate to continue to chase the parallel market at this time. If we stay the course, and just as BKO said, there are other things we can do, both on the supply side to improve supply and on the demand side to reduce demand. For instance, by the time we begin to refine petroleum products domestically, you can imagine the reduction in pressure that will come to the foreign exchange market. Because right now, the fuel will import, ranging maybe between 1 billion or more per month, dollars per month. That is a lot. It's a lot of pressure. And don't forget, only recently, we also paid $500 million to service our Euro bond. So all of this, and of course, we had pent-up demand coming from the previous dispensation. There are maturing obligations. So all of these things are coming up onto the market and putting a lot of pressure on the market. So these are the things, but my view is that these things are transitional things. We need to stay the course. We don't have to panic and begin to move away from the current reforms. I think the current reforms should be sustained, whether with the fuel subsidy or with the foreign exchange, but we should moderate the extent to which we allow the market to entirely determine things. Because in economics, there's what we call market failure. And what that means is that from time to time, government needs to intervene in the markets to ensure that we don't have too much of volatility.
Is that to say that you are seeing it differently from what the International Monetary Fund said about the economic policy or policies which is too loose to support the nation's currency?
No, there's no evidence to say that the economic policy is loose. I mean, if you look at the data, even the ways and means, I mean, for the past 1 month or so, or even past 2 months, the ways and means has reduced significantly. Because right now, there's what we call fiscal consolidation. With what is happening now, government revenue is improving. So the need for recourse to ways and means is also reducing. Even at the last FAC meeting, not all the revenues were distributed, partly because of this risk to excess liquidity. Just about 60% or so was distributed among the 3 tiers of government. So I think the key issue are some of these factors: pent-up demand, speculation, speculative activities, and issue of confidence. I mean, look at the recent release of information on CBN financial statements. That is enough to also trigger even a confidence problem. Because when you begin to look at it and begin to look at the reserves, that is enough to panic. And in any system, particularly financial system.
Let's talk about that the exposure, the huge exposure to JP Morgan. What was this really about, and who could have permitted that humongous exposure?
Well, I think this is another evidence of the kind of impunity that characterized, with due respect, that characterized the previous dispensation. Because, just as many analysts have said, it was a very shocking revelation. Perhaps this is why the CBN has refused to publish its audited accounts for almost 4, 5, or 6 years. Because how on earth can we, get exposed to that level? We are talking of billions of dollars here. And all the official documents that we have concerning our debt exposure are documented by the Debt Management Office. There's nowhere where any of these figures are, any of these numbers are featured. We have our exposure documented to multilateral organizations like the World Bank, ADB, and the rest of them. We have our exposure to commercial creditors, essentially the Euro bond. And we have exposure to bilateral creditors, which are just Germany, China, and Japan, essentially. These are the things that are documented in the official figures of our external debt. So it's a big shock that suddenly we now discover that we have this kind of exposure of almost 13 billion US dollars.
Right.
It's scandalous. It's scandalous, to say the least. And this kind of thing also creates a confidence problem, for our foreign exchange market.
It's quite interesting, development we're seeing, regarding the currencies in Nigeria, talking about the Naira. Dr. Muda Yusuf, please hang on. We will definitely continue on, this, issue, what we're looking for solutions, to help the Naira survive. Do stay with us here on Journalist Hangout. We'll take a break and be back with more.